We detected two unusual trades on Google stock, Alphabet, today, July 23rd. And what's very unusual is that Google reports earnings today after hours. So in this video, we will analyze this unusual option activity to find out how wealthy investors are trading Google for earnings. Are they bullish or bearish? So that we can also trade in the same direction to make money while the rich are getting richer on Wall Street. Because as we all know, the rich have more access to information, sometimes leaked insider information, such as earnings reports, to make better financial decisions. So without further ado, let's dive into the data as usual. As you can see here on the option time and sales tape, the first unusual trade were these 14,000 contracts being traded at the same time for these August 16 options at the 195 strike calls and the 205 strike calls. And so when we take a look at the chain for these August 16 options, we can see at the 195 strike calls, open interest of just 7,200. That is much less than the 14,000 that were being traded. And also at the 205 strike calls, open interest of just 3,500, also much less than the 14,000. So we know that both of these options are opening trades, and you can see our position here. Green means buy, red means sell. So we bought the 195 strike calls and we sold the 205 strike calls. And so when we analyze this trade, you can see that this is a vertical call spread. It costs $175 of debit each. And you can see here on the Greeks, this is a bullish long trade because the delta is a positive. If it was a short bearish trade, it would be a negative delta. We can also see here that the max profit on the blue line, if you look here at the box here at expiration, when these options expired, $825 of max profit that we can make on this trade. Okay, so that is the first unusual trade, but keep in mind, this is earnings, so it is higher risk. If you want the lower risk, higher chance of profit trades, then make sure to go to our website.
Visit www.unusualoption.com to join our membership and start your journey to a financial success with a partner you can trust.
We'll put a link at the top here where we share the trades of wealthy investors who could be insiders and also option strategies that reduce risk in order to increase profits. Now, for the second unusual trade, let's take a look at the option time and sales tape again. We can see that these happened about 30 minutes ago at 2:27 p.m. 7,200 contracts for these November 15 options at the 210 strike calls. We can see that they paid $410 for each of these contracts. So how much is this trade in total? 410 times 7,200 contracts. So this was about $2.9 million. Okay, this is slightly more than the first unusual option, because if we were to calculate this trade here, you can see they paid $272 over here and they sold for $96, which means each of their trades cost $176. And since there was 14,000 contracts, this trade was $2.4 million. Okay, so both of these trades are in the millions. And for this November 15 trade, you can see over here, we are also in the same position. And that is why you can see this POS in green, where we bought these 210 strike calls. we can see that the open interest was just 2,000, much less than the 7,000 that were being traded. And so they were buying these 210 strike calls to open for 410 each. And so when we analyze this trade, you can also see that this is a bullish long trade, but because they did not sell any calls on this trade, this actually has unlimited profit potential. It is not capped. There is no max profit. It could continue to go up higher if Google goes up higher. But this trade has more risk than the other one because it has a higher break even. Notice the break even here, right over here, which is the share price of Google at about $214 per share. At expiration, it has to trade above that for these options to be profitable. So Google has to move much higher in comparison to the first unusual trade that has a lower break even over here. Okay, their break even on this trade is actually below $200. Okay, it is at about $196 per share. So keep that in mind if you are trading this. And as we mentioned earlier, these trades are higher risk because of earnings. Anything can happen even if the earnings reports are good. So if you want access to the higher chance of profit trades that do not have the higher risk, such as earnings events, then make sure to go to our website. We'll put a link at the top here. Let us know in the comments below, what do you think will happen to Google for earnings? Do you think it will go up or will it go down? As usual, please smash the like button, subscribe if you haven't. Take care and have a great day.